Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Friday, October 26th. Well, we started the day off with a positive tone in the pre-market session. We had some durable goods data that came out on top of some decent earnings for some big bellwethers. Weekly jobless claims that were gradually declining. And then markets actually popped up, gapped up at the opening. That marked the high of the day, and we started to sell off. And that was basically on a Fitch rumor that they would imminently downgrade the U.S. sovereign rating. And then they came out with a statement saying that they do not expect to resolve its negative outlook on its U.S. Ratings until 2013. So markets actually sort of recovered early on, right around late morning, early lunchtime, and then we just kind of chopped around here. So you can see here, 3-day price action, inside day, not telling you much other than we're looking for direction, right? So I thought we're going to get it for durable goods. Then we come out with Apple, and Apple actually missed. Their numbers weren't that great. So they actually sold off to 585, and they rallied back up to down about $4 from the close, which is not that bad. I think it's a delayed reaction with Apple. So I think eventually, if you have large hedge funds and mutual funds, their number one holding is Apple, somebody's going to look to take a profit. And when that starts, that's not going to be good for the markets as well. As you know, S&P heavily weighted in Apple as well as the Qs. And the Qs was selling off when Apple was halted last night at an easy dollar. So we really need to pay attention to what Apple's going to do today. And again, if Apple doesn't move today, and it's maybe down 5, down 6, down 7, or maybe up 1 or 2. That's not a great sign either. If you looked at past history of Apple, Apple was up easily $15 to $20, and usually held its gains for quite some time. So there's definitely a shift in sentiment in Apple, and that just needs to really be in the back of every trader's mind, even investors. Let's run down the numbers real quick. We had Nasdaq up 5. We had S&P up 4 and Dow up 26. Really light day, real light day. Then let's roll into the overnight session. We had Asian equities. They were down sharply. That was basically because it's a heavily tech-weighted index, and that was basically due to Apple and obviously missing the top and bottom lines. Now, I want to briefly, before we get into the charts, and I'm going to show you what I'm looking at, is that I've always said in the last couple of months anyway, saying, guys, I know the dollar, watch the dollar. And I think that there's definitely a big shift that's going to be coming in the dollar. And one thing is the safe haven status, right? So we have the Swiss franc, and we have the Japanese yen and the U.S. dollar. Well, the Swiss franc is pegged to the euro, so that's gone. The yen, their government, the Bank of Japan, is in the midst of constantly intervening with their dollar. So that being said, the only safe haven left is going to be the U.S. dollar, and that's going to be a big shift in the dollar. If the dollar really starts to gain momentum, you're going to have a big sell-off in equities and commodities. And with the euro in crisis, and you still have China, and I've been mentioning about the China trade, that's going to be really starting to intensify down the road. And I'm not looking right now, but that's something that really needs to be also in back of the trader's mind. Now, the big thing is the Fed, right? When the Fed starts to reverse monetary policy, which is really basically yield differentials, they narrow back in favor of the dollar. You really need to understand, saying, hey, you know what? We got to catch a bid in the dollar, especially even at these levels where the dollar did bounce for the last couple of weeks. We're so oversold that there's plenty of room to the upside. So down the road, something that we really need to capture. Now, I also like to look at the sentiment cycle, right? The seasonality tendencies of what the market does. Now we're also looking at seasonal strength. We are coming across seasonal strength. That does not have to happen. And where the market's at a critical juncture right now, where we are we topping? It's very possibly that we could be topping. Could it be a Santa Claus rally? Come markets dip a little bit further, and then we rally, and then we sell off into 2013. That also could be the case. Now, these are all things that we need to shift through in our trading, right? So whether you're a swing trader or whether you're a day trader or just a position trader or a long-term trader, everything needs to the individual needs to figure out what their risk tolerance and exposure is going to be. At this point, I'm looking to only pick trades for the day. Maybe an overnight hold, 1 or 2 positions, if in fact, that everything is lining up for just a bounce into the overnight session. Other than that, I think there's too much risk right now, and that's why I'm looking for great setups. And if I sit there and I don't do anything for the day, that's fine. I'm setting myself up for the next day. So just remember, cash is a position, okay? All right, now let's go into the charts, and I want to show you what I'm looking at. So 3 days of price action, right? A lot of traders get stuck in this rut, and they just get chopped around here. And this is something that really you got to understand. If we're still stuck in a range and there's not a lot to do, you got to find a great setup, and you got to hold yourself back instead of constantly getting stopped out of trades and just kind of generating expenses, which you don't want. All right, so here's what I'm looking at. S&P 500, here's the cash. And I drew this a few days ago. It looks like it's absolutely happened. But if you look at this, right, we have a break below our 50. Here's a 200, and we have a 38% retracement, which is the 1395. I would say a break and close below 14, even 1395, 1400, because we have the 38% Fibonacci retracement here. A break and close below 1395, let's put the line in the sand, you're going to see the 200. And if we start chopping around at 200 and break lower, I think all bets are off. I think a top will definitely be in, and a lot of these fund managers will be liquidating stocks into the new year, and you will not see a Santa Claus rally. Now, if we hold here, and if we hold the 200 and we start to chop back around, then it's very likely we will see a buyers of dips come in, and they'll look to support this market into the new year. So that's what I'm looking at. Now, that's going to be what for day trade? It's going to be a heaven's dream, right? So if we're looking to break below and we start really shifting sentiment, all you have to do is look for great setup settings, sell rallies, and, of course, manage your risk properly. And if you are a longer-term investor and you're looking to say, hey, I'm not looking to, sell on the first scary sell signal, then, again, I'm a big fan of buying puts for insurance to hold your, if you're going to hold your portfolio through these uncertain times. So anyway, again, guys, $13.95 in the cash, line in the sand. I would be $1,400 in the minis, ES minis. Keep a look at that. We're below that right now. We're down about four handles in the minis as I'm recording this. So keep an eye on that. It's very important. Now, what another shift is that what's happening is, of course, the Apple, and I'll get into that in the Qs. We have the leaders not leading and the followers hanging on by a thread, right? So spiders, same thing as the S&P cash. You could see big distribution days. Momentum oscillators look horrible, and we're just sitting here on a pivotal low, which is 140. 140 will get you at least 138. By the time 138 hits, the 200-day will be up here, and that'll be right on the 200-day. So 140 is going to be a really important test here of the spiders. That's going to be my my support, my key pivotal support in the spiders, which I like to look at during the day. So 140 is what we want to look at for today's session and into Monday's session on a closing basis. So as you can see here, and I have this from this week, we broke this little area, we had a little thin zone, and now we are sitting in support again. So again, guys, a break below 140, you're going to see 138, which will come right down below. S3 gives you 138.71. You're always going to get an overshoot. 138, call it on the 30-minute chart of the spiders. And you can see here, inside day. So this is where, if you don't know where price is formatting in the charts here, you understand that you're going to get chopped up if you don't realize that. And obviously, a lot of the stocks will follow what the S&P does. Now, there are different like small biotechs. If there's a catalyst for it, it's not going to matter what the S&P does. So make sure you understand that, and maybe do a symbol overlay with the spiders and what your stock you're trading, and see if there's a correlation with the S&P. And if it is, then you're going to want to really pay attention to what the spiders does, or of course the S&P and the minis are what you're looking at. Bonds. Okay, bonds, obviously market up. Bonds here basically holding. Did get a little pop-up from the low, so we're just going to take a look at what bonds are doing. Not much here, but we are just underneath the 200-day moving average. So as you can see, the Bollinger Bands are starting to tighten here on the daily chart. So we're going to take a look, pay attention to bonds. But bonds are so heavily manipulated by the Fed with their QE3. So we just, I kind of just like to look at what it does. 38% retracement. Diamonds, look at what happened here. Lower trend line breach, broke below that lower trend line. Now we are sitting literally already almost at the 200-day moving average, where we had a little bit of room on the S&P. So not looking too good. We're already there at the 200. Okay. Well, this is now, and the diamonds, which obviously is a Dow ETF, should not be a leader, right? It's a follower, right? Out of the 5 indices we follow. Banks, the XLF, really hanging in there. I'm really shocked how the banks are holding up. I honestly am shocked how it's holding up. Again, really sort of like another manipulated a sector with what the Fed does. I really kind of stay away from the banks. I'm not really a big fan of it. IWM's at the 200-day moving average. Okay, now this is one of the leaders. We're already at the 200 and bounced. Dead cat bounce, bear flag right up in this area here, as you can see, and we're holding that long-term trend line. Okay, now we have head and shoulders measurement right around the 78, 79. So we're not quite there yet, but if you look at this bear flag pattern, you could see easily that there's more room to go. And if we break and close below this, and I don't mean just one day, we need to a couple of days below the 200-day moving average, you'll see a continued break. And if we do break below that, we see that little thin zone here on the daily chart. So easily, next target would be $76. Let's just call it rounded off. So not looking too good. Transportation sector, really not getting anywhere. As you can see, we had a bounce up to the 200. We failed. Not looking too good. I don't have other charts here. I don't want to get too long. But if you look at crude oil, gasoline, all of these sectors that are really a good gauge of a barometer of the economy are not even rallying. They're not doing well. So this is not a good sign, although gas prices are up. Anyway, let's talk about Apple for a second. I get a lot of emails with Apple. Here's my take. We're below the 50, below the 20, and we're sitting on just below the 200-day moving average. We had our head and shoulders target just about hit, and we're basically flagging now underneath this long-term trend line. If, in fact, they missed and their guidance was very conservative, which they usually are, we have distribution here. Our momentum oscillators are terrible. If this is a real big bellwether, and obviously want to take a look at Google as well, but if Apple can't gain any momentum, I think Apple is broken. And I think Apple goes much lower. So I would really use caution if you're looking to pick a bottom here, because Apple can go. If Apple's model is broken, which I'm not saying it is, but if anybody gets wind of it, any big funds, they're going to get rid of their shares and they're going to start really liquidating their position. And Apple's going to be in big trouble for a big hurt of pain for a while. So I'd be really looking at this 200-day as going to be your next target. And I'm really going to be interested to see what Apple does. Apple did amazing over in the post market, excuse me. But you have to understand here, it could be just like people are confused with the earnings report. I don't know, but it's a shocker that Apple didn't. It opened down about 586 and it bounced back up again. So could it stall out here today and continue selling on Monday? Yes. Again, I don't trade Apple other than maybe some options, but I definitely look at Apple and I do analysis on Apple, and Apple isn't really a hurt of pain right now. And I think Apple, any rallies will probably be sold into liquidating a lot of these funds. So if everybody jumps on the bandwagon, I think Apple's going to really be in big trouble. So just a word of caution if you're trading Apple, please, use your stops. It's very, very important, especially with a stock like this. All right, lastly, the Qs. Look at the Qs at the 200-day moving average and looking to break the 200-day moving average. And obviously, guys, whatever Apple does, Qs will follow 2 times. Okay, so just keep an eye on that. Obviously, let's look at the dollar. Today's Friday. Should be a light day today. We'll just keep an eye on what's happening here going into Monday. Again, Apple, the dollar, S&P, 1400 in the minis, Spiders, 140. Those are going to be your key pivotal support levels for the day. If we break on a closing basis, I think we're going to get further selling. Of course, not just straight down, but we're going to really, a break below the 1400 will confirm that we're going to be selling rallies for at least several days. Have a great weekend all, and I'll talk to you on Monday. Take care, everybody.